Hi, once again, I'm back, Kaushik Chatterjee. In this video, we are going to discuss again a very important discussion, and that is all about somebody is looking out for a home loan, and when they are processing with, let's say, XYZ bank or let's say XYZ institute or financial institute. So, while processing, even when the credit manager role comes, a very critical moment, a very critical situation. The credit take a call, right? For each and every bank, even somebody from the financial institute, somebody from the bank. So they might be knowing what exactly the credit rule, what exactly the credit policy, what exactly the credit manager even going to take a call on this XYZ even customer or XYZ even documentation. So credit is a very important call even whenever you are going to take even any kind of loan, especially for home loan. If I look out, a credit is a big matter. Credit call is a big, even huge call. But the question over here is not about the credit department, not about the credit call. The question here is the discussion over here is if I process, let's say X bank, if I process with Y bank, and if I process with Z bank, my same documents, my same even home loan, I'll be getting a different funding from different banks. So let's say I'll just give an example. So let's say X bank, if I process what happening based on my same even parameters, based on my same income parameters, based on my profile, whatever I am, whatever I have given to the bank. So X bank is, let's say, giving me a 50 lakhs amount. Example, as already you have discussed. So how a credit manager will take a call, how even this FOIR especially it will be calculated. So that already we have discussed in other videos. So you can go, you can watch the FOIR part and how loan eligibility it will be there. Then you can come back and watch this video. Now, Y bank may be giving me, let's say, 55 lakhs. And let's say the Z bank is going to give me, let's say, approx 60 lakhs. So what is the difference now? X is giving me 50 lakhs, Y is giving me another 5 lakhs extra. The Z is going to give me even another 5 lakhs extra. No, this happens. Even most of the people, even as a layman, if I look out, if I'm not a banker, so it is a big question for me. I'm the same person. I'm having the same income. Whatever I have provided, even that is also same. My documentation also everything is same. But why this difference? Why different bank is taking even a different call, and based on what they're going to fund me even different amount? So that's a big question. Now let me tell you, if you are going to apply to a bank, and let's see if you already applied to the bank or let's say any kind of financial institute. So as a layman, as a even a loan borrower, you should understand this concept. So why this different? So let me before I explain this, let me also make you understand in a very simple process. Today, let's say if you're going to purchase, let's say something, let's say a vegetable. Let's say if I'm taking an example, let's say for potato for regular use. So if I'm going to purchase, let's say just to my colony, even let's say my area, even some, let's say a street vendors or street vegetable uh, owner, if I'm going to purchase, let's say they are going to give me, let's say a 30 rupees cost. But same if I'm going to purchase, let's say a little bit, let's say a kind of consumer shop, so they are going to give me around 40 rupees cost. And if I'm going to purchase the same even potato, let's say to a mall, a supermarket, they are going to take from me, it is 50 rupees. Now, what is the difference? Somebody will be thinking, so potato is differently, it has been growing for different people, different land or different category. The answer is no. Potato is same, even for the street vendor, even for this kirana owner, or let's say the local even let's say shops, even this local medium, or let's say the local shop, and same for this mall owner also, or let's say the supermarket mall also. Now why this price difference? That's a big question. And who is going to answer for me? Even as a consumer, we never thinks all of this. But when it comes to our bank funding, when it comes to my own funding, and when let's say I'm very much keen to purchase even that chosen flat or chosen even apartment, and if I'm not getting my appropriate funding from the bank, so I may be a little bit disappointed. I may be a little bit doing the mathematics, doing analysis, doing like kind of searching. why it is not happening for me, why it is happening for others, and why this difference is going to happen. So let me tell you, come to our discussion. So why bank and why this credit manager? So this actually parallelly it works. So let's say if I decide, or let's say if I assume that I'm the credit manager, or let's say if I'm going to take this customer call. So first, as a credit manager, what I need to do, I need to align with my bank policy. Are you getting my point? So let's say if I'm working for X bank, if I'm working for Y bank, and if I'm working for Z bank, and if I'm the credit manager, or if I'm the credit head, I'm going to take a call on this customer event profile or customer event funding. So I need to align with my credit policy, my bank credit policy first. And different bank, different policy they will apply. And because of that only, the entire even credit policy, the entire even credit call, the entire even funding policy, the difference between the funding, it will be changed. Now, how this credit manager is going to align with the bank event policy. So there will be more and less, if you look out, there will be four parameters this credit manager has to follow. The first and foremost thing, what exactly the risk capacity taking of my bank. So typically if I look out, every bank, each and every even financial institute, they have a capacity. Okay, if this is my earning on based on this, because that is an internal management call, internal policy, they make it something like this. So if this is my earning and this is my lending capacity, so up to this much only I'm going to take a risk. So let's say if I'm going to take a call on any profile, so I need to take a call, let's say 80% of the total even property cost, or let's say 90%, or let's say 75%, or whatever it is. I cannot even go beyond this. So that is one way, the bank even lending capacity. It defines on this lending capacity. Now, the second is very, very important, like what exactly the person that customer even profiled. Again, it differs between different banks. So some banks will promote even some particular, let's say business, some particular let's say a salaried person, or let's say a business category people, or let's say a typical even some professional people, or let's say some kind of different category of people. So they have a different call on this different people. They have a multiplier option also on this, because let's say if I'm giving my example, let's say if I'm a doctor, or let's say if my earning, if I'm showing this X, so definitely on my credit policy they will be calculating, because Kaushik is maybe a very popular doctor in his area or in her area. So based on that one, whatever he is giving me as a return of ITR, right, or whatever his banking statement, or whatever his, let's say earning statement, whatever he is showing, but banker will be knowing they earn even more than this, the person has a capacity to gain even more than this. So in that way they will even multiply with a lot of based on the profession, based on the income ratio also, right? So that is also one category. The third category is again very, very important, that is all about your overall internal policy. Now, what exactly bank has given the loan, and what exactly bank has able to recover, this is a percentage, is very, very important for a credit policy, even for a credit manager to take a call. Even somebody is working for X bank, somebody is working for Y bank, and somebody is working for the Z bank. Means if I have, let's say, given 100 rupees loan to someone, let's say as a banker I'm talking, and if I'm able to let's say get the repayment of entire 100 rupees, then my uh, I'm on a risk free situation. I can take even any extent to the risk of the profile, or let's say on the funding parameters. But if, let's say, if as a banker, if I'm not even able to get the repayment of 100 rupees whatever I have given on, let's say, even 50 rupees, or let's say even 60 rupees, so there I need to be very, very cautious. Means my earning is a threat. As a banker I'm talking, so if I take more risk, what will happen, my repayment capacity already it is low, and if I take even more risk, funding even more, so what will happen immediately, if I'm not getting the again repayment option, so my even repayment ratio, my even like reserve ratio, it will be definitely, it will be affected. And definitely that all put together, what is happening, it again going to affect on your profit, again it is going to affect on your loss itself. So this all together, if I look out, so it is definitely, it is very very important, the company policy, the banking policy, the particular that organization policy has to be aligned with the credit manager, and that person is going to take a upfront even a call on the property, on the event profile, even exactly how much and what extent, what percentage of that funding I can take a call, right? So I hope this is very very important, and I hope this is a very clear discussion. Any further discussion, any kind of further queries, I'm always available, as I told you, always with my 18 19 years, whatever my experience with my all customers, all my even during my even 10 years. So that only I'm just sharing over here. I'm not here to promote any kind of product, any kind of service. If it's really going to help you out, I'm the happiest person to know this. Thanks for watching. Thanks.